Knowing market structure can make you a lot of money in trading. If you have been struggling to get consistent results in Forex trading, then knowing market structure can be your goal saver. So in this video, I'm going to explain on how you can understand the market structure in the most simplified way and most understandable way as possible. But first, I will answer this question from my subscriber called Calfrad Masterclass 975. He asked a question and I'm going to answer his question on this video first. The question says, please, can you explain how to use the one-day time frame high and low of the previous day to determine the next market movement? So on the daily time frame, we only use the daily time frame to know the phase on which the market is in, and we know that the market moves in three phases. The first phase is an impulsive phase, then after an impulsive phase comes another phase, or a retest, or a corrective phase like this. And after corrective phase ends, it breaks to form another impulsive phase. Heading back to our charts, you can see right here that the market previously was on an impulsive phase. Then it failed to break this structure and started to make an impulsive phase like this, before actually breaking this structure right here to form another impulsive phase. Now, this impulsive phase is what we could have traded in the lower time frames only. We can see right now this is step index, and the market currently on the daily time frame is on a retest or a correction to the previous daily time frame lower low. So we are not going to trade just because the market is on retest right now, because you can see it is still on an impulsive phase. So we are going to wait. Then we're going to use the daily time frame to tell us that we should wait until at least this level breaks and forms another impulsive phase, or at least this level breaks to get another impulsive phase to the uptrend direction. To get a further understanding, I will mark this impulsive phase right here, and we're going to use this impulsive phase on the lower time frame to see how this impulsive move was moving on the lower time frame and how we could have gotten our entries using this impulsive phase. So I will start first with the 4-hour time frame. So this is that impulsive phase that we did see moving in just as clear as a straight line on the 24-hour time frame. You can see now on the 4-hour time frame that it was moving in making series of lower highs and lower lows, and not just a clear straight line as it was previously seen on the daily time frame. So let me proceed to the 1-hour time frame to see how this impulsive move was moving. We can see further on the 1-hour time frame that the market, this impulsive move, that on the daily time frame it was just in at this clear straight line. You can see that in the lower time frame the market has been moving, making series of lower lows and lower highs just like this. Now let me go to the 30-minute time frame, because most of my entries I enter them on the 30-minute time frame. We can see on the 30-minute time frame that the market also has been moving on the downtrend direction, progressively making series of lower lows and lower highs. How could we have entered our sell trades on these kinds of movements? Simple. First of all, I will use this line graph to know clear the market structure, because on the line graph there are no manipulations, there are no weak rejections from the candlesticks. So I will use the line graph first to get a clear picture of this market structure. And you can see when you put a line graph, you can see now the market structure, it is visible clearly, making this series of lower lows and lower highs. So our entries on this kind of pair could have been on these zones. This was our first zone that we could have considered, because this is the zone that the market did use to break the market structure of this previous movement right here. but unfortunately the market didn't come all the way up to this zone right here. So that's not bad. Just wait until the market gives you another good phase to you to enter. So we can see that the market did proceed to on the downtrend direction, breaking the market structure of this level right here. Okay, and after it broke, it did provide us with a second phase of a corrective phase, just like this. So I will go to the charts of the candlestick to see how the market did react on this zone right here. So we can see just right after the market impulsively broke this zone right here, it did form another phase of a correction, and we can see that the moment this correction this corrective phase did break, the market continued to enter onto this kind of trade. So our entries could have been on these zones right here, just below this market structure, and our stop loss just above this corrective phase, and we could have ride this trend until to the next possible support level, possibly on this level. It's where it could have been my take profit, just aiming this support level, but you can see it went further, and that's a good thing. But my take profit could have been on the nearest support level, because I can't risk to see all my profits bouncing back from this support and going all the way back. So it is always proper to put your take profits on the support levels, and you will always get another and new fresh entries. So I will delete this and I will explain to you in the next move, in the next way on where you could have get your entries on these kinds of market structure. And not all corrective phase are worth entering, because we can see right here the way this market was progressing on this level. It is not where you can say, okay, right now let me enter this trade based on this corrective phase, because it has just broken this level. No, you can see that this correction it was moving in a not very clear way. Another way on how to enter these trades based on the market structure, because the daily time frame, it shows that we are on the impulsive phase. We can go and further confirm our bias on the lower time frame, just like this. You can say, okay, this market was providing some kind of a triple bottom right here, aiming to go reverse on this pair. But on the daily time frame, it shows us the market is in a very strong momentum to the downside direction, and this triple bottom right here, it did fail when this market broke with full body candlestick to this level below, like here. So how can you enter this trade? It's simple. When the market breaks the structure, wait for the next phase to end, either a retest or a corrective phase. And we can see here, the moment the market broke this structure, we did get a minor double top right here, and we know a double top pattern is a selling pattern. Okay, and you can see the moment the market formed this double top pattern, it came to break this neckline right here, and the moment it broke this neckline, it went to the downtrend direction. Okay, so guys and girls, if you have any more questions on the market structure, maybe you have a specific problem, please do not hesitate to comment on this below video, and I will try to explain the question or the problem that you're facing in the next video as clearer as possible. And I hope you have a nice day trading. Bye bye.